Greetings, members one and all of the Salivation Nation. The path to $21 silver by February of 2020. That's the topic of today's video by this particular piece from moneymorning.com. Let's explore. Yes, I've not heard of this place before, but a little research I've done, I found this website, and Peter Croft, who is a resource specialist at the organization here, and he says that the price of silver might not be finished correcting yet, but it will be soon, and when it does, silver prices in 2020 could smash a 3-year high and challenge its 5-year top. Now that will be interesting, as most of you remember, the prices did get up to about $21 and back in 2016. We'll take a look at that here later. But he goes on to say that ever since silver peaked at around the $19.50 in early September, investors have wondered how much consolidation lies ahead. And we have seen silver get smacked down over the past few months for a myriad of different reasons. I think mainly because of trade and other factors that really are temporary problems that could be fixed soon. In fact, even the hope of them being fixed has caused the price of silver to really kind of get pushed back down below resistance levels that at least the arbitrary ones that I had set below $17. In fact, some analysts think that we could see silver get pulled back to the $16.50 range before we see any kind of upwards movement trajectory in the price of silver. In the author's update last month, he suggested that silver could see more correcting and consolidating, and that's what's been happening, will continue to be happening. Silver's been forming a series of lower highs and higher lows, which is a typical technical downtrend pattern. But with the Fed's newly expanding balance sheet, stocks have soared to new record highs. The 10-year Treasury bond hit a clear bottom the same day gold and silver peaked. We've been back to a risk-on stance as the White House hints at progress towards a U.S.-China trade deal. In fact, even with in the last couple hours here on the news, we're talking about how the markets have been not as concerned. They've kind of tempered their concern, and so the markets have not really been reacting. In other words, they're feeling somewhat optimistic, cautiously optimistic, that there may be something, even if it's not signed for the phase 1 portion until early next year. Despite this, some silver indicators are suggesting there may not be much downside left. And before we continue, I'll say that let's say that they do sign a phase 1 trade deal in January, and prices are expected to go up to $21 potentially in February. Let's see why the price of silver could rise even with that in place. The silver prices are down only about 3.25% in the last month. That peaked at $18.15 on November the 3rd, then gradually sold off to the current $17 level. But that doesn't change the fact that the precious metal is up 17.2% since late last May. And the latest developments in U.S.-China trade could push the price of silver even higher. That's if turns out there's not as much of a trade. In fact, I even talked about that in relation to gold. But that certainly does apply to silver, and even magnified even more probably for silver, that it could go higher. In late October, the silver price moved 3% on a single day as industrial demand was looking bright in the context of a possible U.S.-China trade deal. Ryan McKay, commodity strategist at TD Securities, said that the talks of a phase 1 deal may have made the industrial metals market look more optimistic. Specifically, he said investors have been underpositioned in silver and near max positioning in gold. This means it's likely that as industrial metals investment grows, it will mostly go into silver rather than gold. Well, yeah, I certainly fully agree with that statement. A few days later, billionaire precious metals advocate Eric Sprott said precious metal prices at current levels are gaining acceptance, and the sector could be in for more surprises. According to Sprott, there could be more of a shortage of silver, pointing to the amount of silver going into ETFs and India. Now, the amount of silver going into ETFs, you have to question that because, it's common knowledge that there's a lot more of these ETFs, paper contracts, than there are the physical silver to back it up. They don't have to put any into the ETFs. I don't think that really matters. It's not really been tested or going to be tested. He's referring to how silver recently reached all-time highs in the Indian rupee. Indians were expected to pile into silver for gifts during the Diwali festival season, as silver imports were up 72% year over year, mainly because of the kind of restrictions on gold that the government of India has put on. As you can see below, India represents a significant portion of global silver demand. 17.5% of global silver demand is in India. And there you can see part of that, a lot of it is in silverware there. And jewelry. Fascinating. But most of it is in industrial. At $1.34 billion, or $1.34 billion, and a massive affinity to precious metals, if Indians keep growing their demand for silver, shortages will come fast and furious. That is something we should pay attention to move in, because that will definitely have a role where literally the demand will play the biggest role in the price movement, regardless of the economy. Obviously, it depends on the economy of India too. But if some of these trade deals work out, that's going to help the global economy. That's going to come into just at the right time too, because the technical indicators are showing the silver prices are ready to pop. The charts he's looking at show the price of silver could breeze past its 3-year high and challenge its 5-year high. Now, we can't read any more of this without signing up for this website, but I have a feeling that some of the reason behind this, and I don't know if this is where the author was going to go or not, will be if the trade deal is approved and you see more because of trade and stuff going back and normalizing or improving with China, then that means industrial demand could increase. And keep in mind, that's not to say that other metals won't increase in production too, which means there's going to be more silver produced. Silver mining will increase, but will it be able to keep up with the demand? Well, the primary silver mines are already, I believe they're past peak production for the primary silver mines. They're trying to find more mines. I'm sure First Majestic is doing some work trying to find, and I've uncovered some of that before, but it may take a while before that does happen, before primary silver mines can reach back to prior production levels. So silver being, most of it being as a byproduct of other metals, they're going to have to really work with these other metals such as gold, copper, lead, zinc, nickel, and have the silver being produced as byproduct of those metals being mined to be able to meet up with that demand. The cheapest silver to produce is that which is produced as a byproduct. We're talking possibly around $3 to $4 an ounce for that kind of silver. Primary silver mines mine at around anywhere between $10 to $14 to $15 an ounce. A lot of that depends on fuel prices too. Oil prices do make a difference with producing silver. So that's the kind of stuff we're looking at that could get us to this $21 silver by February. And that's with or without a trade deal. Without a trade deal, if that falls through, then the fear index will play a part, volatility index, and that could bring it up to $21 an ounce, potentially. Or if a trade deal is passed and there's a lot of demand for silver in a very short amount of time, especially in India, and there's an overall sentiment and a boost to the overall global economy, that very well could also bring silver up to $21 an ounce, meaning it's 3-year highs. Now, he even talks about 5-year highs. So let's take a look at the overall price levels for silver here. I'm going to pull this chart up, and here we can see a 5-year chart showing the price of silver in 5-year time. Somewhat normalized, but this, for a brief amount of time, it did peak, past $21 an ounce there. And you can see where we're at now at $17, a little bit above the average, I believe. Maybe close to it, maybe somewhere around the average between the last 5 years. And but nonetheless, we did see that move past to $19 before. Quite interesting and fascinating to see. They kind of talked about that a little bit in this article. But we'll see where it plays out. I do believe that we are seeing these higher lows. And these higher lows are kind of what we'd like to see as the most conservative view on silver for its wealth preservation aspect. Because silver is an industrial metal. Therefore, it is more volatile. It is acting as a commodity. And I think that its price movements, especially if things normalize with trade and we do get a trade deal signed and we see demand for it as a commodity, I think that's where we're going to see the price move upwards and it'll go up as a commodity. If the trade deal does tank and everything goes out the window and there's some other economic problems, then we're going to see silver move up as a result of it acting in terms of fear as money. We'll see silver act as a money and as a hedge against economic instability. That's the thing, the duality of silver, the dual nature of silver. I can't stress that enough. And what does that mean? That means that I'm bullish for silver. And I somewhat, maybe not fully, I don't know that we'll necessarily see it go to 21. I'm not going to make that bold of a prediction as the author has of this particular article, Peter Krauth. But I think it could go up. And I think it will go up. And it probably won't happen until after the holidays, is my guess. And my guess is in January. In fact, even as such, even as the days ensue, let's say, in early January, they signed the trade deal, phase 1 trade deal, we could see it just crash. I mean, not crash, but we could see silver take a huge fall. But then as the reality of that comes into place, we may see by February a demand for silver as commerce makes a move for production of new cell phones and electronics and things that are produced in China. And then we may see the spigot with economic activity happen. Therefore, we could see the demand for silver increase, causing it to go up in price. We'll find out. Post your thoughts below. I'm sure there's going to be some that will disagree with me and say that silver is going to go down and keep going down, and it may as well too. But I'm going to go ahead and side with the author here, although I'm not quite as bullish at $21. But I'm going to say we could see it get up to close to $20 by the end of February 2020, or maybe even just over $20. We'll find out either way. I don't hedge any bets on my predictions. I don't take myself too seriously in this stuff. I just find it fun to kind of theorize and make guesses like that. But if it doesn't happen, no skin off my back. Because I don't want to lose any skin anywhere on my body. I want to keep the skin on my body. That's what this is about, folks. I want to keep the skin on my body. All right, post your thoughts below. As a reminder, I post videos every single day. So check back on the YouTube page for Salivate Metal. And I want to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.